Okay, traders, a quick review of how I was able to catch some intraday trades on the Australian dollar versus the US dollar using the ICT 2022 mentorship concepts. So, first of all, I was trading the New York session, which is the yellow box here, just the session indicator highlighting the key swings in the market. So now when I was coming to the screen, I immediately spotted this Asian session low. So I have, okay, what's happening now? Yeah, we have some sell side liquidity here, which price attacks during the beginning of the session, takes out liquidity here, market structure shift here, creating what? Bullish breaker, then takes off right up into here, which I buy here and selling back my long here. Then I'm going short here and buying back my short down here. Primarily my idea was to aim for these relatively equal highs up here when I went long, but when I went through the high time frames, yeah, you're gonna see later what I mean with it. This was just a pullback up into this range from this high to this low. But we have sell side liquidity swept here, and of course we have a market structure shift down here. So remember, price can of course come down here. It can, but it didn't. It stayed in here and started to consolidate. So that was why I was catching the long from here to here, because I was watching price here, what it did when created a, I think it was a 5-minute swing low or something. Then I just went long and selling back right up here. So high, low, high, high, bullish breaker. Point that out. Bullish breaker. And what happens? It trades up into this premium range from this high to this low here. And my idea was a run for this relatively equal highs up here, but when price was up here, I went down to, I think it was 2-minute time frame or something. Yeah. When price was up here and we have this shortly the market structure shift here, I basically sold back my long, because now I was thinking, okay, we're gonna have a reversal and yeah, going lower. I wasn't really sure, but anyway, it trades up into what? Okay, 15-minute time frame. Take that off here and here. So think of what happens here. When price takes out the sell side liquidity here, going back up into this range from this high to this low, you don't really break any 50-minute intermediate term high. So basically this is just a pullback up into the range. What do we trade up into? A rally gap. So because of we didn't have any sort of 50-minute market structure shifts here, this become more a pullback to me, how I would read it. So we know if this is just a pullback up and going down to the low time frames again, 50-minute fair value gap up here, market structure shifts, bearish here and sold right here. I was actually taking off the position here because I wasn't really sure at this point if price was just going to reach down into this area and then take off to run this relative equal highs up there. But anyways, was still two profitable trades. And of course, we have some executions here. So you see, going long here, selling back here, selling again, sell position here, and buying back here. So what does this mean? This means you can find setups all day long, back and forth. It's just a matter of what you see. This was something I saw, and yes, of course, in hindsight, gonna probably have a run on this slow down here. So of course we could hold this position for a long time, but anyway, this is just for some student educational, so I won't be perfect. I'm just showing the logic of the trades and yeah, using the concepts we learned from the mentorship. So I hope you enjoy it and maybe you learn something, and have a nice weekend.